1 minute ago, a decision that could reshape North American manufacturing just dropped. Toyota, Japan's industrial crown jewel, was expected to pour $9 billion into a massive new U.S. facility. Alabama was on the radar. The American South was ready. Politicians were preparing press conferences. Instead, the investment is heading to Canada. And that changes the conversation completely. Because when a company like Toyota redirects a mega factory of this magnitude, it's never random. It's strategic, it's calculated, and it's usually a signal. Not just about jobs, but about trust. Let's slow this down and unpack what this really means. First, understand the scale. $9 billion is not an expansion, it's an ecosystem. We're talking about tens of thousands of construction jobs, permanent manufacturing positions, logistics networks, suppliers, battery production lines, engineering centers, research hubs. When a factory of that size lands somewhere, it transforms the region for decades. Property markets shift, infrastructure upgrades follow, small businesses boom, universities align their programs to feed the plant. And the political leadership that secures it gets to claim economic victory for years. Alabama has been one of the biggest success stories in U.S. automotive reshoring. Over the past 2 decades, foreign manufacturers, including Asian and European giants, have invested heavily in the state. Low taxes, business friendly regulations, competitive labor costs, strong transport links. On paper, it makes sense. So, why would Toyota pivot north? The short answer, predictability. The longer answer is more complicated. We are in a new era of industrial policy. This is no longer the 1990s, where corporations simply chased the lowest labor cost. Today, the auto industry is being restructured around electric vehicles. And electric vehicles are not just cars. They are batteries, they are minerals, they are trade agreements, they are climate policy, they are subsidies, they are geopolitical leverage. Canada has been playing a very disciplined game in this new environment. Over the last few years, Ottawa and provincial governments have rolled out massive incentive packages targeting EV production, billions in tax credits, direct subsidies for battery manufacturing, infrastructure guarantees, energy supply stability, and perhaps most importantly, access to critical minerals, lithium, nickel, cobalt. These are not optional components in the EV revolution. They are strategic resources. Canada is rich in them. And that matters because since the pandemic, supply chain security has become a top priority for multinational corporations. Remember what happened during COVID. Factories shut down, shipping routes collapsed, semiconductor shortages crippled global auto production. Executives learned a painful lesson. Dependence is risk. So now companies like Toyota are building supply chains that are shorter, more resilient, and politically aligned. Canada offers proximity to the U.S. market under USMCA trade rules, but it also offers a stable regulatory climate that doesn't swing dramatically every 4 years. And this is where the political dimension becomes impossible to ignore. The United States right now is navigating intense political polarization. Trade policy can change depending on who controls the White House. Climate subsidies can expand or be reversed. Tariff rhetoric can return overnight. If you are committing $9 billion over a 30-year horizon, those uncertainties are not minor, they are existential. A mega factory cannot relocate every election cycle. It is anchored, which means executives must ask a brutal question. Where will policy be most predictable for the next 3 decades? Not the next 2 years, 3 decades. Canada has been marketing itself as that stable partner, close to the US, aligned with Western trade blocs, politically calmer, less volatile in rhetoric, more consistent in industrial policy, and consistency wins long term capital. There's another dimension most people are missing: energy. Electric vehicle production is energy intensive. Battery manufacturing consumes enormous amounts of electricity. Canada's grid, particularly in provinces like Ontario and Quebec, is heavily powered by hydroelectric and nuclear energy. That means relatively stable electricity pricing and a lower carbon footprint. For global automakers under pressure to reduce emissions across their supply chains, that's a powerful selling point. A factory powered by cleaner electricity improves ESG metrics, and ESG metrics matter to investors. Now let's zoom out further. Japan's position globally is delicate. Japan relies heavily on the US for security guarantees, but it also trades extensively with China. The US China rivalry has intensified over technology, semiconductors, and supply chains. Japan must navigate carefully. By diversifying its North American footprint into Canada, Japan reduces exposure to potential future U.S. trade turbulence while still staying inside the Western economic orbit. It's a quiet hedge, not anti American, but strategically balanced. And multinational corporations think in hedges. They don't make emotional decisions, they make probabilistic ones. Let's also address the optics. If Alabama truly loses a $9 billion mega factory, it sends a symbolic message. Because American political leaders across party lines have been promising a manufacturing revival. Bring jobs back, rebuild American industry, outcompete China. But reshoring depends on more than speeches. It depends on corporate confidence. And corporate confidence is built on stability, incentives, and long term clarity. If companies perceive unpredictability, they will look for alternatives that still provide market access without policy risk. Canada offers exactly that equation. And here's where this becomes structural. Canada has already secured massive EV investments from other global players. Volkswagen committed billions for battery production in Ontario. Stellantis has expanded aggressively. Battery joint ventures are forming at speed. This is not isolated, it's a pattern. Clusters create momentum. Once suppliers establish themselves in a region, more manufacturers follow. Because logistics costs fall, talent pools grow, specialized engineers relocate, universities adapt, an ecosystem forms. And ecosystems are hard to compete against once established. If Canada becomes the preferred North American battery and EV hub, reversing that gravitational pull will be difficult. Very difficult. Let's consider the domestic American reaction. Expect political leaders to frame this as competition. Expect renewed subsidy packages. Expect debates over whether federal incentives need expansion. Because this isn't just about Alabama. It's about prestige. It's about economic leadership. It's about whether North America's EV dominance will tilt north of the border. But here's the uncomfortable reality. Governments are now engaged in industrial bidding wars, and corporations are leveraging that competition. They negotiate aggressively. They secure tax breaks. They demand infrastructure guarantees. They request training subsidies. And they choose the most attractive long-term package. This is modern economic warfare, not with missiles, with manufacturing, and the battlefield is supply chains. Now let's talk about time horizons. A traditional gasoline vehicle plant might operate under relatively stable demand assumptions. But the EV market is in transition. Demand forecasts fluctuate. Battery technology evolves rapidly. Solid state batteries could transform the industry within a decade. Hydrogen alternatives are still being researched. So companies need flexibility. They need governments willing to co invest in innovation. Canada has been presenting itself as a collaborative partner, not just a location. And that partnership model appeals to long term planners. There's also a labor dimension. While Alabama offers competitive labor costs, Canada provides access to a highly skilled workforce with strong engineering pipelines. And under USMCA rules, vehicles assembled in Canada can still qualify for North American trade benefits. So, from Toyota's perspective, market access remains intact, risk is reduced, incentives are generous, energy is stable, minerals are accessible, and political volatility is lower. That's a powerful equation. But this story isn't about winners and losers. It's about direction. Where is the EV industry consolidating? Where are battery ecosystems forming? Where are supply chains shortening? If the answer increasingly includes Canada, then North American manufacturing power may rebalance subtly over the next decade. And subtle shifts are the most dangerous. They don't create immediate headlines, they create gradual transformation. One plant here, one research center there, one mineral processing facility added quietly. And 5 years later, the industrial map looks different. That's how gravity changes. Let's be clear, the United States remains an economic superpower. It still hosts massive auto production capacity. It still commands enormous capital markets. But industrial leadership requires continuous reinforcement. You cannot rely on past dominance. You must win each new wave. The EV wave is that test. And if Toyota's $9 billion decision signals that Canada is currently offering the more compelling package, Washington will need to respond strategically. Because once ecosystems entrench themselves, reversing them becomes exponentially expensive. Factories create suppliers. Suppliers create jobs. Jobs create political leverage. Political leverage shapes policy. Policy shapes future investment. It's a cycle. And the country that secures the early wins often sets the trajectory. So when you hear Toyota chose Canada, don't treat it as a regional economic story. Treat it as a geopolitical data point, a signal about where corporate trust currently sits, a signal about industrial competition inside allied nations, a signal about how supply chains are being redesigned in the post pandemic world, and perhaps most importantly, a signal that the EV race is not just about cars, it's about minerals, energy grids, trade agreements, political stability, and long term predictability. This is the quiet contest reshaping North America, not with dramatic confrontations, but with capital flows and capital flows towards stability. The real question now is this: is this a one off decision driven by specific negotiations? Or is it the beginning of a broader realignment? If more global manufacturers follow Toyota's path, then the balance of EV manufacturing inside North America may tilt in ways few anticipated. And once that tilt becomes structural, reversing it will take more than rhetoric. It will take strategy. Because in global economics, the loudest speeches rarely win, the most stable environments do. And tonight, stability may have just scored a $9 billion victory. If you want deeper analysis on the economic and geopolitical forces reshaping the global order, beyond the surface headlines, subscribe. Because the real battle isn't just over factories, it's over the future.